Hello and welcome to Property Box News. I'm Simon Evison. This week, a look at the proposed housing court and a legal way to avoid paying stamp duty. Yes, you heard that correctly. But first, in a new study by Seven Capital that surveyed high net worth individuals, that's those with earnings of more than £100,000 per annum, they found that 85% of investors are continuing to invest in the UK property market despite Brexit, and interestingly, 23% of these cited Brexit as the catalyst for them to invest. Andy Foote, director at Seven Capital, commented that seasoned investors will know that if the market were to take a dip after Brexit, it would more likely be a catalyst for the inevitable swing back. He continued, the property market is a prime example of well-known cyclical patterns, growing through recovery and emerging stronger than previous peaks. In other words, if it takes a dip, as it did 10 years ago, it will recover and come back stronger. According to Foote, there are two other key factors to consider. Firstly, the chronic undersupply and ever-growing demand for homes in the UK, whether rented or owned, is not going to change with Brexit. Secondly, property isn't a quick purchase or investment if it's flipped. Foote added, if you're looking to buy a home, the chances are you're not going to be thinking about selling up again in less than 5 to 10 years' time. And if you are a property investor, you're likely to be looking for a long-term gain from it as well. Either way, a dip or no dip, the price of your property, providing you did your research, and that's the key, research, providing you did your research properly before buying, is likely to appreciate in the long run. So let us know what your thoughts are. Where is Brexit going to take us? We've asked this question before, who knows, but we'll see in a few weeks' time. The creation of a housing court to replace and simplify multiple different judiciary systems around property disputes has been mooted for a long time now. The government has recently completed a consultation within the industry, and there has been mixed reactions to its findings and suggestions of the direction it may go. The proposed court would deal with property-related disputes, including those regarding repossessions and substandard rental housing, and would replace the current system where consumers pursue their cases through the county courts, the magistrates' court, high court or first-tier tribunal. Neil Cobbold, Chief Operating Officer of automated transaction platform PayProp UK, supports the court and feels that there will be quicker redress for agents and landlords. Additionally, he says a simpler, dedicated court could placate concerns over landlords regaining possession of their properties if tenants default on rent. The Law Society, however, is the latest to come out and criticise the government's proposals. They feared a new court might be set up as no-cost jurisdiction, like a tribunal, and therefore there would be no legal aid and no means for tenants to fund legal representation. The Residential Landlords Association has an opinion, of course, and they said the current system was not fit for purpose, with housing issues dealt with by a range of civil and criminal courts and tribunals. It said a specialist housing court could bring these together in one place and should be judge-led and sit outside existing court buildings, in civic buildings, schools or even pubs. Outside opening hours, of course. And that would be to relieve the pressure on court buildings and speed up the process. Housing charity Shelter said the proposed court might improve access to justice, but without sufficient resourcing and access to legal aid, changes to the court system could be disastrous for renters. Our support, they said, for a specialist housing court is entirely dependent on it being adequately resourced. So, it's still early days on this, and there will no doubt be more reports and analysis in the coming weeks, and as always we'll keep an eye on developments. But in the meantime, tell us your experiences with the existing court system and what you feel could be improved on, and also what aspects work well. Leave us a comment below. And finally, since April 2016, property investors and those who buy a second home have been hit with a 3% stamp duty charge. Now, there seems to be a legitimate way around paying this. Yes, I said you can avoid paying stamp duty. In a recent case in Bristol, a court ruled that investors Paula and Nikki Bewley did not have to pay the tax on a derelict bungalow they purchased. The ruling stated that because the property was not immediately inhabitable, stamp duty was not due. The property was riddled with asbestos and had no central heating. The couple demolished the building and built a new home in its place. HMRC argued that they should be liable for the higher rate of stamp duty if a property was capable of being used as a dwelling in the future. The tribunal disagreed. Just to reiterate, the ruling means that by buying a property that is derelict or uninhabitable, buyers can avoid the stamp duty surcharge. According to the Housing Act of 1957, a property must have a lavatory, cooking and bathing facilities to be considered habitable. HMRC may challenge this verdict, of course, and also the definition of uninhabitable may become the subject of a legal battle, so watch this space. That's all from me, and as always, like, share and subscribe. Goodbye.